And I think when you put all this together from a fundamental perspective, I'm surprised the stock's not up more.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So Tesla once again blew everyone away apart from a few deluded bears with their Q3 2020 results. In this video, I'm going to compare and contrast some of the opinions from a Tesla bull/realist and a Tesla bear, Gene Munster and Craig Irwin. We'll see what the mainstream finance media had to say as well. I'll add a few thoughts and comments where I think it's relevant. Let's dive in. But first, hey guys, if you live in the US and would like up to 2 free stocks valued up to $1,600 each, use the link in the description to WeBull and deposit $100 in your account. Each of these stocks will be a minimum of $8 in value, so if you suck at math, that is a 16% ROI on your $100. Not bad. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it.
Let's get more on Tesla's quarter. Bring in Fast Money friend and Leap Ventures founder Gene Munster. Gene, good to see you again.
Hi, Melissa.
What would be your first question to Elon Musk on that call at 5:30?
Are you going to throw a lifeline to traditional auto? Because I don't think that this maps out well, and I think it's ultimately around battery efficiencies and gross margin. What they're building right now needs to be replicated.
Translation: copy Tesla, license their technology, or go out of business.
And that would be my first question. I do want to mention, too, is that I think it's important in this conversation to extract the emotion out of this. The emotion is looking at a chart that looks like a crypto chart that has been a long time cautionary tale for any investor. And I want to extract that and focus on the fundamentals here.
This is a monstrously good point from Gene. Keep in mind what he just said about taking the emotion out of it, not looking at the stock chart and going, oh my God, that's insane, what the hell? Actually pay attention to the fundamentals. This will be very important when we get onto the bear reaction very soon.
Gross margin per vehicle, ex credits, increased to, call it 23%, up from about 19% last quarter. That's really important because as they can make more on each car, they can either continue to lower the cost of the car or deliver more earnings to investors. That makes it more difficult for competition.
Tesla's increase in margins quarter over quarter and year over year is absolutely phenomenal. We're starting to see some of the payback from things like the building of the Gigafactory in Shanghai, less capex per unit of capacity, lower labor costs, lower parts costs due to localization of the supply chain. We're also seeing the enormous impact of the Model Y, still ramping using new technologies like the gigacasting, like the octovalve heat pump, and many other improvements. They're continually iterating day after day, week after week, month after month. The Model Y that began coming off production lines around a year ago is completely different to the Model Y that's now coming off lines, and it's completely different to the Model Y that's going to be coming off lines in the future. These margins will continue to improve, which means Tesla can either reduce prices and or benefit from higher margins, which means more cash in the bank, which means more factories, more investment in bringing costs down even further. This is an incredible feedback loop that Tesla's in now. They're already light years ahead of everybody, and there's no end in sight to their reduction of cost.
So, and second is on the delivery target, and agree with Tim that they may or may not get there, but let's give them the benefit of the doubt and say they get there. That implies, call it 63% year over year delivery growth in the December quarter. That's an acceleration from, call it 43% in the previous quarter. And they're doing that with Model Y just in North America and France. And so effectively, they still have a product, Model Y, that could be half of their auto sales. And then the last piece, and this is something that we rarely talk about, is what they're doing around energy storage and generation. It's small, 7% of their business. It accelerated. It grew at 44% year over year. It was flat last quarter. It's an example of Tesla taking technology that they've pioneered in auto and applying it to new markets.
So good to hear an analyst talking about Tesla's energy business. At the moment, the vast majority of Wall Street, retail investors, pretty much everyone's ignoring energy because it's such a tiny component of Tesla's business today. But this continues to grow. Double energy a few more times and suddenly it will be approaching the scale of Tesla's automotive business. As we heard at Battery Invest today, battery storage alone for home energy storage needs to scale about 1,600 times from where it is today. And Tesla is going to capture an outsized portion of that market, in my opinion.
And I think when you put all this together from a fundamental perspective, I'm surprised the stock's not up more.
Tesla stocks should be higher. Oh, Gene, you should know better than that. The vast majority of retail investors, Wall Street analysts, and everyone in between still has no idea what they're looking at when they see Tesla, let alone what their quarterly results mean. Inferring based on today into the future, it hurts our brains too much to do that, Gene. Of course the stock's not up anymore. Now, in all seriousness, I completely agree with Gene. This was an absolute blowout quarter. Stock should have gone to the moon if it was rational. But as we know, over the short term at least, the stock market is anything but rational.
And then separately, I think we can have a discussion about valuation. That's a whole different topic. But Tesla is a company that has flaws. Elon Musk is far from perfect. This is no Apple when it comes to compliance and kind of its strict attention to detail. But it is a company that ultimately, I think, is progressing and going to gain huge market share in auto over the next decade.
Now that we've heard from the Tesla bull, and I use the term loosely because honestly, Gene's more of a Tesla realist in my opinion. You want a Tesla bull? Talk to Kathy Wood over at ARK Invest. It's now time to hear from a Tesla bear, Craig Irwin, who historically hasn't exactly been completely on the mark with his Tesla stock price targets or his comments around the business. Let's see what Craig had to say.
Tesla's got a lot of work to do to convince people really about the autonomous, right? A lot of the valuation is being driven by expectations around autonomous. And they're talking about releasing full self-driving. You know, even today was a couple days late. It was supposed to be out on yesterday or the day before.
I tend to agree here with Craig that Tesla's current valuation in terms of their stock price is factoring in a huge amount of the autonomous component. However, it's kind of embarrassing that Craig's opening point here is to start nitpicking about the fact that the rewrite of full self-driving that was being pushed to a couple of select beta testers was a few microseconds later than expected. I mean, come on, Craig. Your opening point should be a little bit stronger than that, my man. Come on.
The bottom line is, if it's being valued, you know, at a greater number than the sum of all the competition in the U.S., but it's only going to do 500,000 vehicles versus everybody else at 17 million.
Remember earlier in the video I said to pay attention to what Gene Munster was saying about extracting the emotion and the preconceptions and actually just looking at the fundamentals? I think Craig is kind of getting a little bit caught up in the emotions once again. Oh my God, Tesla's valued at all the US automakers combined. This doesn't make a whole lot of sense. Rather than actually drilling down, looking at the numbers, the trend, understanding what's going on and looking into the future and going, that's why it's valued the way that it is now. I get it.
You know, they've got a lot to prove. And, you know, I'm not going to get all that excited about $400 million in upside and 20 cents on the bottom line. You know, the valuation is stratospheric, and they really need to prove that they can get things on the road and functional. I personally believe that their full self-driving is a little bit of a fantasy right now, and that there are others that'll do it sooner and better.
Today I learned Craig Irwin knows approximately nothing about deep learning and neural networks. Hey, in Craig's defense, not many people do, but if you're going to be sharing your opinion on who's going to achieve fully autonomous vehicles first, it's probably better not to open your mouth unless you actually understand enough to probably not be vomiting garbage. I mean, this is not going to age well, Craig.
Interesting. So looking at that performance year to date, up still more than 400%, Craig. I mean, what do you think is fair value for the stock right now?
So we have a target of 150. I see that as fair value. You know, if this stock was trading in a range that was rational or reasonable, that's where I think it probably would be.
So Craig Irwin thinks Tesla stock's fair value is $150 per share. Please let me know in the comments below, guys. What do you personally think is fair value for Tesla stock today, based on what you understand about the company and their future?
You know, it's unlikely to get there anytime soon. Just because the fervent enthusiasm for the name is out there, and Elon Musk has specific levers that he could pull to keep surprising people, or so-called surprising people. We've been talking about the launch of the mini car and the entry of the Indian market as the two most near-term levers he's going to pull. And on the call, there was no mention of India. You know, I was a little disappointed about that, but Elon has tweeted recently that he is going into India. And then the mini car, he's taken some questions in public at different places, and you know, it's real, it's coming. These are both going to be nicely additive to units, but largely already in the stock. So, you know, he's got to pull it off. He's got to get this full self-driving out there incredibly, and I think it's a big challenge.
So in summary, Craig's thoughts, I think it's fair to say Tesla stock's way overvalued. It's completely detached from reality. They have a lot of execution risk. It's going to be very hard, blah, 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 blah. Now, in general, I actually agree. Tesla stock is pricing in a lot of future success. The stock price is very high based on fundamentals. I totally understand that. There's huge execution risk. It's not going to be easy. But what Craig seems to be missing is the trend, the track record, the trajectory, the history, what Tesla is doing. It's no point in just looking at a tiny snapshot of today and then basing all of your analysis on that. You need to look at what's happened in the past and what does that trend infer in the future Tesla's margins are increasing, their costs are coming down, they're increasing their production capacity, they're going to have economies of scale, they're innovating new technology. They told us on the earnings call they're developing their own machines. Like, there's so much going for Tesla. There's so much going against legacy automakers. You just have to put the pieces of the puzzle together, and suddenly the crazy, ridiculous, hyped up, overpriced valuation of Tesla stock suddenly comes into focus being a little bit more realistic because it's capturing some of that future inevitability of Tesla's dominance. As Gene Munster says, he's surprised Tesla stock hasn't gone to the moon. Meanwhile, Craig Irwin still has a price target of $150. I mean, he'll come around eventually, or he'll stop talking about Tesla, one of the two. And just finally, I want to say a huge congratulations to all the Tesla shareholders and a massive congrats to Tesla for blowing it out of the park. And just wait for Q4. Here's my prediction. Every record Tesla has made, broken. Revenue, cash flow, operating income, deliveries, production, cash on hand, you name it, it'll be a record. Mark my words. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget your free stocks with WeBull and stake using the links below. Open a new WeBull account, deposit $100 and you'll get 2 free stocks valued up to $1,600. And stake, spin the roulette wheel, you'll either get Nike, GoPro or Dropbox.
Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.